Okay, morning guys. Hope we're all doing well. Let's see who's in. And welcome to the Morning Playbook, 16th of June. So, hope you enjoyed the ride yesterday. Just got the Dow up here, so just going to go over, excuse me, just going to go over what played out yesterday. What played out yesterday in the Dow and the overnight, well, our markets, the Asian session, and the overnight US markets. It looked like a massive setup to me, a bit of a bull trap. Sorry, a bear trap. Spike lower, wash out the zone, and then pop higher and consolidate and just go. So, yeah, in hindsight, I mean, it was easy to see, but yeah, massive bear trap yesterday in the Dow futures. They just, as soon as they dropped, it just started it, just ticking off lower, lower, lower. So, interesting to see, and a massive bounce back last night. So, basically, well above where it started yesterday. I think on the Dow is about a 8 or 900 point rally from the open to the close on the futures. You can see here it was somewhere, say 28,846 to 7. Yeah, about that. 800 points, 27.8, 800, 900 points. So that's a massive rally. So that's what it just leads me to believe. Obviously, bizarre, very bizarre, and very, very. Look, if you're getting chewed up a bit, it's just a very tough market. I mean, there would have been a lot of people bailing on shares. I mean, we got stopped out of another one yesterday. So we've only got, I think, the one position on the shares. And then there would have been a lot of people bailing on that big sell-off yesterday, and they'll be turning around trying to slam the computer to get back in again. It's just, look, it is weird, but it's that kind of thing, when you got the Fed backstopping any sort of serious pullback, throwing money at the market, completely supporting it, and their aim is to keep interest rates lower. And now overnight they come out. The reason why we got that big rally was they are buying up corporate bonds just to support companies, and obviously keeping that interest rates down. So what else are you going to do? I mean, pretty much overvaluations or not, you're going to be buying. You'd be risk on and buying into shares, aren't you? So tough gig. So that's what the market did. We saw that open here, chopped around, and then that big sell off, and that was about when the Hang Seng opened at 3, just before 3 o'clock. Just got straight down through a key support zone around 24.3, bounced straight back, consolidated, and basically this candle, this green candle where it took off from, was the open US at 11:30. So just bang, up we go. Like I said, 900 points rally. Yeah, exactly. Can stay irrational longer than you can stay rational. Much deeper pockets. So that's true. And if this will make you laugh, I'll get on to 5 minute. I could just find out where I went long. So I was mucking around here. I did go long about here somewhere, stopped out just on this little pop, stopped out by 10 points, and then boom, up we go. So it's all fun and games. So if we go over to we've got the wide mini, look at the DAX too. DAX, same sort of scenario, gaps down the open, pops back up. So it cleans out this zone, cleans out this level, pops back up. And when you consolidate above a zone, not a good sign for bears. And just a big bear trap. So anyone that's got caught on the open there, excuse me, on the DAX, and then saw this consolidation, bang, up we go again. And that was 11:30, the open of the US market, and we rallied about 200 points in the DAX. Probably more to come on the open tonight. You'd expect the DAX index is going to open up. Hang Seng, much the same. It did pop up on that, so that's the 11:15 open. I actually got a long off there, look for that squeeze, and I wasn't going to be sitting around playing with that too long, and made some money on that. And then the market, you can see this is a candle when it opened at 3 o'clock. The market was already heading south and just got smacked around straight down to support, like I said, through consolidation. So you've seen this consolidation at the previous lows or around about those previous lows, that big bear trap, like I was saying, and then a pop up. So, and that was just a big squeeze of any shorts that built up throughout the day, which was quite a lot. You can see here quite a lot of shorts have built up with this action here. When you go flying through, it's going to drag in a lot of shorts. By then we'd closed. The ASX had closed. That was right at 4 o'clock. We're down 100 and something points, expecting to be open up about 160, 170 today, in the next 15 minutes or so. And then just see it rally. So yeah, it's stimulus supported. I mean, I still don't agree that we're going to rocket higher, but in essence, everything's going up at the moment. It's risk on. And we'll look at gold now. We'll look at the Aussie. Aussie was the same sort of thing. It was consolidating around just above those lows, this low here. That's around 68, say 6,800. Consolidating, went through, popped back up. And when you sort of pop back up too far, I don't like seeing these big pullbacks. And then when you sort of start to sell off again, and all the bears are thinking, okay, we're going to take out this low, down we go. But instead, once you start to find support, and you can see this momentum was really didn't get going on the downside. Every time it sort of got going, it was getting bought up, and then we got this big flush and bought straight back up again. Okay, and then we started holding that zone around 68, and then that's where it started to lift. So in essence, if you're looking for a long opportunity, because you know that going to be traders squeezed out, prime spot would have been just in here, if you can see, just in here to go long. Once you start to break up, consolidate, and look to go again, just that continuation trade, then away you go, and it was up and racing from there. So those two, like I said, they're correlated. We were talking about this yesterday. Aussie's correlated, so it's risk on back into the Aussie. The currencies look quite settled that the markets, the Fed's going to backstop everything, and they're happy to go higher, go back, risk on. So this Aussie looks like it's going to test. I mean, this is a minor level I've marked up here at 69.58 to see if there is some sort of selling reaction. We might get a pullback there because it is extended, but there's no reason why it just can't keep pushing up to 70, back into this resistance zone up here where it's traded a few times. This might be just what it's needed to rally straight up quite hard. I wouldn't mind seeing something like this and then back up, and I would expect that's going to take us up and through, but we'll see. You can never tell in these markets. Euro, again, US dollar, or go to the US dollar, you can see that sell off in the US dollar, and that was pretty much the open, it was about 5 o'clock, open European session. The US dollar just kept getting sold. So that is a bit of a heads up where we're going to bounce. And I think equities at that stage, at 5 o'clock, 4 or 5, about here. So once you see that sort of bounce back and you're seeing the dollar go with it on the downside, bit of a heads up that it's going to bounce. You would expect the markets to bounce, because if this was, if they were very risk adverse, and you can see the dollar, once it opened up, we didn't really go anywhere. The US dollar didn't really go anywhere. It was getting capped quite a bit. And if that was a risk off environment where they're buying the dollar up as their safe haven, that should have gone on a bit harder, but it didn't. Instead, you just started to get capped up to this high. Europe opens, and then you get the sell-off, a lower high coming to play just in here, and then we got the further sell-off. So once that started to sell down, I think equities were pretty much starting to look good for a bit of a bounce. And then obviously, where'd they go from about 11:30? It was about here somewhere. So this little high here, then we got sold off in the US session as equities just bounced hard. So Euro was just being supported by US dollar weakness. We're back up into a zone where we could potentially see, I'll be watching just for a shoulder to see if we get a bit of a pullback, take some heat out of this bounce. Markets are extended. We haven't got momentum turning over yet, so you prefer to see that momentum start to roll, market go back up to try to have a go at this, break through, build a lower high, pressure come in at overextended zone again, and then see if we can have a bit of a sell-off and just work off the shoulder. So that was that. I'm not really worried about it. The pound is pretty much the same. It bounced on US dollar weakness. Pound is, you've got this downtrend has been broken, bit of a flush out of, not a key support zone, but a flush out of these lows, these previous lows. Bounced straight back and just took off, with that US dollar weakness. Now the yen is pretty much sidelining. It looks like it could pop, but you're going to expect not much movement in the yen, and maybe some buying not much movement in the US dollar, and potentially some buying into the yen. I can't see the US dollar rallying from here. It doesn't make a lot of sense. If it's risk on into equities, you would expect that US dollar to go down. So if that's the case, it probably would be capped. But look, we'll see from here. Technically, it's come all the way down here, pop back up, building this major higher low, and then there is a chance that we just spike up and through that zone there off this higher low and squeeze out all these shorts. We'll see how that goes. Now, we had a short on, we'll go to crude first, since it's up. Look at it, crude. I was speaking about this yesterday. This looked heavy. So I put up a note into TradingView. I don't know if anyone saw that. In the TradingView that was looking heavy, and I was looking for this kind of price action. I wanted to see a bit of a spike through. a pop and then lower high to hold for a jam through that support at 34, 32. Instead, it was weak straight into that zone. So I wouldn't see this as a short setup. It was, look at, you could have gone short in here, but your risk is just above that low, and then into this support. It's only a short, more of a scalp than a sort of a swing trade. For a swing trade, I would prefer seeing that push down, a bounce back up as the bulls try to hold it up off support, and then that weakness to come in. I mean, that's different when you don't get down too far. It's showing some buying strength, and then selling is still coming in and starting to overwhelm the buyers. But instead, there was no real buyers. Bang straight down into support, bounce, pull back, this higher low off support, and then we turn around and just rallied pretty hard from there. So again, crude is supporting the theory of higher prices in indices. Gold's saying the same. The US dollar, if it keeps heading south, it's saying the same sort of thing. So yeah, it's a bit of a risk-on environment at the moment, which is going to be tough because I'm not seeing a lot of setups on the shares. I mean, you're sort of buying late in the trend, and when you're late in the trend and you get these moves down like we saw yesterday, you're getting squeezed back out pretty easily. Squeeze back out, and then they sort of reestablish and go again. But again, like I said, you're not early into a trend, you're late. So that makes it a lot tougher, and you've got to make sure you know where your risk management is. Now, that was oil. We had, like I said, we had a short on gold. I'll go over that, and then I'll look at Bitcoin, Ethereum. And by the way, I just want to quickly, before we do that, this is copper. So copper is another correlated market. We took out this low with this move down and then bounced. So that bounce suggests once we break out of this sort of downtrend, I would expect, look, I want to see this. If we start to pull back and hold higher levels like this, sort of inside higher lows, I would expect that to go. And then I think it's, if there's a risk-on environment still, expect copper to rally back up through these highs at 262.5. Gold, we'll just touch on gold. Now, we sent out an alert to short this yesterday. Look, it was a bit late in hindsight. There was a nice shoulder here. You can see that shoulder, and it started to sell off about 3 o'clock when the equity markets fell apart. So that would have been, and this is a hard thing, if you're buying because of a safe haven, that's not trading as a safe haven at the moment. It's trading in line with US dollars. If US dollar gets smacked around, weakness, then expect gold to go. Now, if they keep flooding the market with US dollars, I wouldn't expect the US dollar to find any strength. And that's probably what's going to trigger. It won't be a sell-off as such. I wouldn't expect a sell-off in the markets to trigger buying into gold, because it's not, because that's buying into the US dollars, pressuring gold down. So that's why we were looking at a short on that yesterday. Shorted a bit lower, sort of shorted it through this low through here at 1720. Now, it was on the spot market, 1720. It went down. I was looking for 1705 as a partial, but it didn't quite get there. Like, it was just, and even here, I don't think it really got there. I did probably in the end. By then, it was a bit late for me. So I took some off at 1710, lowered the stop to lock in at least a small gain on that final bit, just below this lower high. And then, of course, it turned around and bounced and stopped us out. So that market is still, it's still looking fairly good. Whether or not we look for another short here, if we're going to look for a short, you want to see sort of a breakdown, the first pullback, maybe something like this. It could drive back into support, even drive and push through these lows at 1703, and we go a bit lower, potentially going back to the bid zone around 70, thereabouts. Again, we'll just have to wait and see. Now, that was that. I'll just quickly go over Bitcoin. We were talking about weakness yesterday. There's a few crypto traders. Now, there was some weakness coming flush down like we expected, but it bounced straight back again. So not a bad sign. It's going with a risk-on environment with US equities. But it's also, if you think this is going to take over from the dollar and all that, it's not playing out that way. It doesn't look like that to me. US dollar rallies, this is heading south. So basically, the US dollar was sort of starting to bounce here with this move down, sort of in the equity market anyway, when we started heading south. And all that was during the Asian session. So that's pretty much the same sort of scenario as what we saw on the Dow, the Dow overnight markets, the Dow futures. So that, consolidate back above and up we go. Okay. Am I still coming through okay? Just had a phone call in my head. through the Bluetooth, my phone's hooked up as well. Okay. Quick scalp, I don't know, 200 open. Oh, nice work, mate. How'd it go? I haven't actually seen that. What's the market? It just opened. Pop up. Nice. Pop on a 5-minute chart. All right. So what have we got here? So this Bitcoin, I mean, could find some weakness. It's still up against this resistance zone where it was yesterday. But again, if equity markets rally, you would expect this to pop, and we're probably heading back up to 10,000. Ethereum, much the same. Big sell-off, big retracement. This is not looking so great, and that is that longer-term support zone coming up. You can see it's just been broken yesterday. So whether or not that's going to trigger more weakness, but I'll be keeping an eye on Ethereum to see if if we get this kind of action weakness come in, look for that sell-off and then jamming through those support. All right, that's about it, guys. That's all I wanted to touch on. Thanks for joining me. Hope we go well. Hope we all have a good day. Enjoy yourself and just be safe. Stay safe out there. Just remember the markets will turn around. If you're a technical analyst, really look at it hard. If you're a fundamentalist, then you just want to just be careful anyway. Don't know how you'd manage your risk being a fundamentalist, but it's just they're not adding up at the moment. The macro environment's not quite adding up to where share prices should be. We don't argue where they should be. We're just trading what we see. All right, guys, have a great day, and we will speak to you again tomorrow at 9:40. And if you can, much appreciated if you can jump on the Twitter and all that. Subscribe to our YouTube channel and give us a like. Cheers, guys. Speak to you later. Bye.